Hello and welcome to this special broadcast on money control. I am Nandita Khemka. Well, the US is very close to getting its new president, and with Republicans winning control of the US Senate after 4 years, and with Trump having an edge over Kamala Harris, one can only guess which way the verdict will swing. In fact, some of the agencies are already reporting that Trump has crossed the majority mark as well. Now, if he wins this year's election, Donald Trump, in fact, would be the first US president in 132 years to serve two non-consecutive terms, a historic verdict, right? But to put into perspective how the US election verdict will impact world equities and emerging markets like India, let me welcome on board Ajay Bagga, renowned market expert, to join us. Ajay, great to have you as always. First of all, season's greetings and wishing you a very belated happy birthday. But
Yeah.
looking at what's happening in the US, it's pretty much clear, right, that Trump is set for his second term, for a return, so to say, to White House. First of all, are you surprised by the verdict, or what's your sense? How are you reading into this?
Yeah, Nandita, if you look at it, the pollsters got it wrong, the prediction markets got it wrong to a large extent, and it looked like a tight race. But I did write, a couple of days back that it's a possibility that there could be a landslide because, what has happened is that hypothetical bias has gone up too large. What is a hypothetical bias? I come to you and I ask, Nandita, who are you voting for? You say, okay, I'm voting for this. But as a cohort, 25% of us will not go and vote. So, when it's a race with 1 or 2% vote difference making the impact, and then you have such a huge hypothetical bias, that becomes an issue. I'll give you a small example. Iowa is a farmer's state. It's cornfields and the University of Iowa, and stuff like that. There they said Trump is losing. It's a Republican bastion. The farmers don't vote anything but red. And they said Trump is losing. And if you look at that poll, it was 808 people that they asked. And now today, Trump is winning Iowa. That poll was totally off, but it made a big impact, and Trump was really frowning, and it led to a lot of pyrotechnics from him. And the pollsters were totally wrong. So, and this was a reputable, pollster who were right the last two times. So, the prediction markets got it wrong. The pollsters got it wrong. We sitting here, but dependent on secondary sources and talking to friends and relatives. Indian Americans, Nandita, were 60% supporting Harris, 30% Trump, 10% said we don't know. The second very big thing was people said they are undecided, but they proved to be undeclared. What does that mean? The shy Trumpers. Uh, I don't want to be identified as a Trump voter. I'm not a MAGA kind of a person, but I want to vote Trump. So I say I am undecided, but it's actually an undeclared vote which has gone to Trump. I think that those are the two big things. 5 million votes he's ahead right now. We are talking at midday India, and still counting is on. But 5 million popular votes he is ahead of. So that would be unprecedented for someone like Trump to get such a huge plus. So clearly, some segments have just moved en masse, like Latinos, for example, a lot of so-called immigrant segments who you thought would be Democrat base. There were Pennsylvania, for example, has a 2 lakh Arab population who, because of the support by Biden for Israel, they might have voted against their candidate rather than for Trump. I think all those things will come out later. So, sorry for a long answer to a short question, but we were preparing for both, and frankly, for India, Trump is better because Republicans have been more fair to India than the Democrats have been. But they are both American presidents, end of the day, and they look at their national interests. We look at ours.
No, no, thanks, Ajay, for putting it into perspective. But let's talk about the impact on markets, right? Especially for US and Europe. For US, we've already seen a Trump trade play out, right? We saw a very strong rally coming in over the last couple of sessions. If you look at the US futures as well, strong reaction there. Dow futures were up somewhere around 400 to 500 points. In the broader market participating, right? Look at the Russell 2000 as well. So strong rally. Equity markets seem to be upbeat for now. What about Europe? How are the dynamics going to really play out for global equities here on?
Yeah, that's a very good question. And overall, you have to analyze Trump's policy objectives. He's going to cut taxes. So 2025, the 2017 Trump era tax cuts were expiring. Those will be extended, especially with the control of the Senate. He can pass the tax legislation very easily. The finance legislation has to be passed by the Senate. So he gets that plus. Second, if you look at he's deregulating a lot, he's against the regulators, so the banks will do well. Third, he's going to blow up the fiscal deficit even more, borrow more. So all that will lead to higher yields in US treasuries, and that is going to constrict the economy as far as the US goes, will lead to higher inflation. The Fed will not be able to cut rates as fast as possible. As we were discussing before the show, maybe they hold tomorrow itself that there is too much political uncertainty, or they go with this cut and then they don't do a cut in December to see the. But Trump gets inaugurated Jan 20th, so markets will
Hmm.
move in anticipation. A lot of hedge funds were short the US bonds because they expect the yields to go up. And we have seen the yields going up in the last 30, 40 days as the Trump traction took over. Cryptos have, today itself, Bitcoin is up 8%. It's given 80% returns this year. Cryptos are rallying because he's anti regulation and pro crypto. So expect more fireworks there. What happens to Europe? Europe, three ways the impact will come. One, their defense budgets will go high when they are not able to afford it. And secondly, their manufacturing has got hollowed out. So Mario Draghi just released a 400-page report about 2 weeks back on how Europe needs to spend about $800 billion to bring back manufacturing in the European continent. So it's an economy which is weak, which is hollowed out, where manufacturing has become too expensive. Somebody like Volkswagen, 80 plus year old company, talking of German plant closures, which is unprecedented, never happened. They're calling for three factories in Germany to be shut down. And if you read their CFO's earnings statement time, his pronouncements, he says our margins are negative if we produce in the German factory. The margins are so low. Their costs are about three times the Chinese factory production. At some point, some models they are 4 to 5 times more expensive. So how do they compete? And Trump will make them bear their defense cost. Uh, the economies will suffer, and by unleashing this, he will exit out of the renewables. And Europe was very pro renewables. So nuclear will do well, oil and gas will do well, and the Trump trades, as you mentioned, higher inflation, lower taxes, lower regulation, all those will do well. So banks will do well.
Okay, so let's talk about the impact on emerging markets like China, for instance. We'll come to India in a bit, but Trump coming back would mean a restarting of trade wars. Like he's publicly spoken about imposing as high as 60% tariff or more. I know even globally a 10 to 20% tariff is what we are looking at now. With the resumption of trade wars, how do you expect the global economy to pan out, especially India and China? China, of course, will take retaliatory measures as well. We are awaiting details of China's stimulus as well, which was expected to be higher in case Trump wins, right? So here on, how should one look at these trade wars and what really would happen going forward?
Yeah, a very good question. And you have to look at first order, second order impact. That's how far we can think right now. There will be third orders, but first order, China will depreciate its currency. What will that lead to? Mexico will have to depreciate, Vietnam, Indonesia, Malaysia, India will follow suit. So expect depreciation. China plays that playbook. 2016-17 they did that. So as Trump rolled in and raised tariffs, they depreciated their currency to compensate their exporters. So expect a lower yuan, and all the emerging market currencies will need to go down along with that. Second, China, the standing committee meeting is on. They timed it such that they started on Monday, a day before US elections, and they end on Friday. So expect some stimulus measures to come in. They have held back some of their stimulus measures, and expect that. So they will try to be counter cyclical and in advance. The third, so second order will be Indian rupee also goes down along with China. The other impact for us will be as the Fed goes slow on cutting rates, RBI will not cut now. RBI will also be concerned about inflation. So all those issues come in. We had a lot of pressure from the Biden administration to reduce our Russian sourcing of defense materials and defense collaboration, including the air defense system. So there, Trump will cut us some leeway, and you can expect. But our renewable exporters, all the solar panel exporters, all that becomes under a cloud because he's going to cut down a lot of the renewable funding that the Biden administration was pushing. What will continue is China bashing. But again, I'm seeing China as more a negotiation tool. As you said, China will also retaliate. It will say Apple can't enter and all kinds of US goods. It will try to find out what all it can also put tariffs on. It has taken European Union to the WTO. Nothing will happen there. Because if we talk about our PIL, if you look at the balance sheets of the Chinese car manufacturers, you will realize they are 8 to 10 times more subsidies than our PIL has ever delivered to the Indian companies. So, it's an open and shut case. It's just that everybody benefited from that China trade where they polluted their own country and they sold at below cost of manufacturing to the rest of the world. But they played a long game. Now nobody knows how to make steel in most of Europe. And one generation goes, you will lose those automobile designers, automobile manufacturers. All cars will be made in China because they just have such a huge cost advantage because of the scale they have built up. So they play that long game. Those are the third order, fourth order impact, not relevant for us as investors. We'll see immediately. One, there will be a sigh of relief in the Indian market on uncertainty gone. So event gone. Second, FI flows becomes an issue, especially if if you and I are discussing a weaker rupee. The FIs knew it a month back. So there, when they take money out of India, that much more equity risk premia they need from India. And when your earnings are going down, how do you generate that? So expect more FI outflows. Third, stronger dollar makes sense. Even the money market funds we have seen over the last 4 weeks, about $12 billion a week has been going into US money market funds. We had expected that $6 trillion hoard of money market, at least 500 billion will come into emerging markets. That gets postponed for now, at least. Maybe 6 months more, they will wait and watch. They'll make their 4% plus an appreciating dollar, and you leverage it by borrowing in yen or even yuan and putting it in dollars. You get the dollar appreciation plus the 4% yield. It's a very good return they will end up making. So that money will go out of emerging markets or won't come into emerging markets. Those are the impacts that you can see.
Right. Let's talk about our markets as well. Of course, you said that FII outflows will continue here on, in the wake of stronger dollar as well as, bond yields rising. But, for our markets as well, we've seen a good 9% correction from highs, although last 2 days we've seen a very good rebound starting yesterday afternoon. But do you think, this rebound is sustainable, or do you think earnings being an issue, do you think we could see further correction here on? How do you really see what's happening in the Indian markets right now?
We are in a spot of a bother, more because of earnings have not caught up with the kind of frothy valuations, and there is some more amount that can go out. Second, we are probably at our limit. If you look at how much we have put in, DIIs have put in about 53, $54 billion in the first 10 months. So you're running at about $5 billion is your capacity. Now, to absorb 10, 12 billion of selling, you can do it for a month, 2 months, but after that, you're constrained. So, FIs going out will have a more marginally more impact on the Indian markets, and we are not seeing any macro which will encourage the FIs. So, that's unless and so, what do you need? You need the government to step in with the counter cyclical measures, like what the Chinese are doing, what Indonesia, Bank Indonesia today spoke about that we will protect the rupiah. We are a little late in that format. We think we are the fifth biggest economy. We don't need to worry. I think we need to worry. So we need to enhance the government spending to revive the domestic consumption, put money into the domestic economy. Second, RBI needs to do some pro-growth measures. But right now, if you're seeing a weaker rupee and you're protecting the rupee, how do you cut the rates then? That has become a dilemma for the RBI. And if Trump puts tariffs on us, 44% growth in exports we have seen over the last 4 years to the US. And if that starts into a degrowth and you have a balance of payment issue or a trade deficit issue, again, RBI will want to see what does it do. So those what we call the classical trilemmas are coming for the RBI. Not a very easy solution. So after this run up, it's not that it's all clear. It's a technical bounce, and one big event has gone out. And hopefully, as Trump sorts Ukraine and Israel, that will lead to better sentiment and might see emerging markets coming back. But that Trump is February, March. So we have to live through 3, 4 months before he can have that impact on those geopolitical risks. So I think we are in a spot of a bother.
All right. Let's talk about some pockets which will see, a fair bit of impact because of the election verdict. IT, as a pocket is extremely buoyant today. We saw the IT index rallying in excess of 3%, but IT has also seen a fair bit of correction post earnings, if I may say so. But, given the fact that we are staring at stiff immigration policies from Trump, and if the rates in US remain high, there wouldn't be any improvement, so to say, in the discretionary demand as well, right? Which IT companies were actually betting on after the rate cut cycle started. So how would you approach the IT pack in light of the kind of earnings that we've seen so far in the second quarter, and with this verdict of Trump coming back to White House? That happens.
Yeah, see, we are expecting better, compliance by IT in terms of nearshoring and onshoring. They will have to take more jobbers within America. So one that margins will get impacted, but the BFSI will do very well. So with the deregulation, you will see quite a few segments which will take off, and their IT can offer more productivity gains. The third is the pile for corporates goes up. Their tax cuts stay in place, and he's very pro corporate, pro the wealthy segments. So expect those tax cuts to be rolled over, and that will leave more discretionary demand with the corporates. So IT should do well. And again, on the AI part, our use cases are now increasing. Now, of course, Google said 25% of the coding is now done by AI, but some engineer looks through it, does the final part of it. I think we'll have to go up the value chain. You might not see too much of employment generation in IT, what we were getting, but service exports could do well because the discretionary pool with US corporates will increase. So it's a mixed bag. It's not very clearly negative. And immigration also, for the higher end immigration, is supportive. So I think, and we don't have too much lower end. We are not like the South American or Central American agricultural labor, which goes in seasonally. Ours are all engineers and doctors and nurses and higher level, migrants that India sends out.
Hmm. Okay, another defensive pocket, pharma. How are you viewing that? Because a lot of experts I spoke to said that after the second quarter earnings, pharma has potential, and looks good for investment. But you know, uh, US of course may impose higher tariffs globally, as I mentioned, 10 to 20%, and that could also impact the pharma space, given the fact that Indian generic drug exports are taking place, right? So pharma as a pocket, do you think there could be some a bit of caution here?
There will be a bit of a sell off on this news that if he really brings in tariffs by February. But overall, he also wants to reduce his healthcare budget. So remember, maybe John Paulson comes in as Treasury Secretary. Elon Musk probably comes in as the Doge, the Department of Government Expenditure head. And Trump is tasking him that we are spending $6 trillion a year, we are earning only $4 trillion. Rest we are printing notes. Get out government expenditure. What Musk did in Twitter could be done on an American economy wide, and their suppliers like us, we can help them bring down their 800 billion healthcare budget drastically. So I think you could get exemptions. India has seen exemptions on a strategic basis, and our pharma companies could get exemptions on the overall cost measures that he takes through Musk. So I'm expecting a high-powered cabinet coming in, and they will take very pragmatic decisions on those, and there our pharma could benefit from the US market.
Right, veering towards earnings now, Ajay, the trend that has emerged is a slowdown in urban consumption. In light of that, how are you viewing the entire consumption basket now? Be it autos, FMCG, we've seen earnings not really live up to expectations in terms of volume growth, even autos for that matter. Some of these stocks have corrected quite a bit. Your views on these two sectors, and where should one invest now? If you're looking at rejigging portfolios, are you finding any pockets, that are attractive valuation wise post the kind of correction we've seen?
India very difficult to find valuation wise attractive, but growth wise, growth at a price wise, banks, private banks, public sector, top end banks, I think industrials. What happened? One, government expenditure went down right from March last year when elections were announced till about July. Government expenditure has dragged. Fiscal deficit, you have seen, we've done 29% in the first 5 6 months. We would blow out 70% by then. So lower government expenditure, higher taxes, higher interest rates, that has constricted the economy, not so strong job growth. All these four factors had an impact. What you need is counter-cyclical measures, as I mentioned. Government expenditure is coming back. From October onwards, it's coming back. That will help. We needed lower rates. That will not happen now. RBI will be wait and watch, and inflation will be an issue. So RBI will just consign it right now till April, not look at cuts. So more heavy lifting will come from the fiscal side. So I would say banks, telecom, industrials, these are sectors. Consumption, FMCG will come back, but maybe it will take 2 quarters. But it's looking good. Valuation wise, you can't justify India. You have to see growth at a price. Only then we can look at. Otherwise, on a global basis, then you go to commodity plays which are out of favor. Those are where you will find, but that we don't know. Unless China's stimulus is successful, and they do it. We don't know if that will go through. So wait and watch.
Okay, before I wrap up, just one more question because you've seen some big ticket IPOs and in recent listings, right? I know talk about Hyundai. In fact, we had Swiggy opening up today as well. Anything that's caught your attention, and especially in terms of Swiggy versus Zomato, we've seen Zomato, really stage a very good comeback story. It has already turned into a multi-bagger, but it is also back on profitable, right? But Swiggy will take some time to get there. So, if someone were to ask you whether I should apply to a Swiggy IPO or whether I should buy Zomato shares, how would you approach that question?
I won't talk a particular company because of compliance, but overall, if you look at what commerce has done, that 10-minute delivery has really liberated everybody across the country, and it's not only the big metros; it's moving very fast everywhere. They made everybody a QSR, so the neighborhood hotel to everybody has become a quick service restaurant. So quick commerce is a mega trend. It's going to be trillions of dollars. So invest in the trend is what I would say. And the P's have enabled them. They will make the lion's share of money. You are coming in at very high PE rates. I mean, a negative profitability. You can't even give a valuation. But look at how they've gone from 5 rupees, handling charges to 7 rupees to 10 rupees, and then when you have billions of deliveries and you make these changes, it just goes through to the bottom line. So it has been done. Quick commerce is here to stay. And look at mega trends like that. On the new paper, it is an issue for India because this year 2 lakh crores promoters have sold, and about 2 lakh 30,000 crores of IPO, FPO, OFS, QIPs have come in. So a lot of new paper or existing paper being sold to DIIs have happened. We have absorbed it. DIIs have bought 5 lakh crores, but then you add on FIs also on that, then it becomes a very difficult situation. That is what we are facing. So I don't like to be self-congratulatory on DIIs. We have managed it well, but we can't give an exit to the amount that FIs are holding in the country. We can't even take the next 2 lakh crores, for example. Then it's better that you let them sell and destroy the market and then you buy at a lower level instead of giving them exits at these levels. That's the thing.
Very quick question that just came to my mind. Before I wrap up, we till now we were talking about sell India, buy China. That kind of narrative emerging since we started a since we started seeing a sell off in the Indian market. Here on, that narrative is about to change. Do you think the China risk factor may have abated for us for a bit at least?
It already abated. This is what, people don't look at the numbers. September 24th, when China came with the stimulus, or Nandita, over 2 weeks, they got $53 billion. The next 3 weeks, they saw an outflow of $15 billion because of the Trump overhang. And second, the stimulus being underwhelming. Third, 70% of Chinese household wealth is sitting in property. So unless property sector improves, and that needs humongous amount of investment, they will again go back to infrastructure investment. Just wait and watch. We'll know on Friday. But it's not China versus India. Already 15 billion had gone out of them. It's all going back to the US. So it's India and China versus US in terms of flows, and we'll get our fair share. China is a cheaper market. It was at 9 times, it became 11 times PE. We were at 24 times. So we'll come down, they will go up. But now with the Trump factor, the 60% factor, I know I don't think anyone will touch China in a rush. I think at least they will wait till February, March to see what Trump does before they take higher. Unless China really crashes back to 5, 7 times, then you might take a call. But otherwise, it's looking difficult right now. I have
All
to go.
right, so that's the, yeah, that's the view
I'm
from
getting
Ajay
calls.
Bagga. Thanks a lot, Ajay Bagga, for joining in and putting things
Thank
into
you.
perspective. It was a pleasure chatting with you as always.
I
Thank
can
you.
go on for hours with you because you're the best questioner, the best anchor across the
Thank you
industry.
so
So,
much.
yeah, thank you.
Thank you.
I'm
Thank you,
sorry I
Mr.
had a 1 o'clock. Thank you.
No worries. Thank you. Well, with that, we've come to the end of this special coverage on US elections on Money Control. But you guys stay tuned to Money Control for all your other news and updates. I'll catch you soon.